This next upsurge that we're about to see, and I'm talking now short to intermediate term, this next upsurge is likely to ignite that phase of the bull market where silver then dramatically outpaces gold. And probably also, if you wobble the stock market, you crack that bubble just enough to cause some fear and nervousness. Not a lot. You don't have to crash it or anything. You'll get some you'll get asset movement out of that category. And our bet is one of the places it's going to go is in the tiny little gold and silver mining sector, to where it will tend to go on a percent basis berserk. So that's where I think we are right now, literally, as we're talking.
In today's silver headlines, CTAs will continue to buy silver while a few false dawns have emerged in the past. Spot and futures prices are both finally breaking out of the wedge that has contained silver markets from the 2024's local top not reached since 2012. TDS's senior commodity strategist Daniel Gali notes, a confirmed break from the wedge may attract further interest. The breakout in futures markets is relevant as it is likely to catalyze CTA buying activity, which directly attracts new directional inflows, which may become self-reinforcing. The break north of $31.55 per ounce in SIH5 will only force CTAs to buy plus 4% of their max size, but CTAs will continue to buy silver in nearly every scenario for prices over the coming sessions, barring a sharp reversal akin with a big down tape. A confirmed break from the wedge may also attract further discretionary trader interest, particularly with gold prices pushing towards all-time highs, given evidence that while this cohort may be involved in the EFP dislocation, they remain directionally flat.
Our view of platinum is we use the term precious metal, palladium as well. We use the term monetary metal for silver and gold, okay? And there's a reason for the differentiation, which I'm sure you understand. Platinum, if you'll study it, we also are looking at the Bloomberg Commodity Index, for example, as an asset class. And it has been moving inversely to the stock market for some years now, and it's done that before the other way, on the upside. During periods of time like from 2000 to 2009 to 2013, in fact, the S&P was in a range. It made a high in the mid-1500s in 2000, came back to the mid-1500s in 2008, 2007. And it wasn't until 2013 it finally got out of that nominal range. So you finally began making money again. During that time, commodities were going up, okay? And even during periods where we have a so-called recession, like in the late 70s, the stagflation, remember that? Commodities were going berserk on the upside, so don't mix too many false notions in there. Right now, the Bloomberg looks poised to follow gold. It has not followed gold. During the period from 2015 to 2020, Bloomberg went down. Not a lot. It had already collapsed, but it continued to edge down while gold doubled. So there wasn't a good linkage. But right now, the technicals look like in this phase of the gold advance and the silver advance, expect broad commodity complex to join in. And it's an asset category that has both low risk and high reward, and stocks related thereto. Uranium producing stocks, copper producing, agricultural related, fertilizer companies, etc. They don't correlate.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Well, to the stock market, they do correlate well to the Bloomberg. Platinum is almost an overlay of the Bloomberg. It is behaving not like gold. It has been behaving for quite a few years now like the Bloomberg Commodity Index. So I can't come up with the conclusion that in the next few years, platinum's going to go berserk more than gold. No, I can't do that. It may, has its own unique fundamentals. The one I do think will go berserk relative to gold is silver. Okay, we know it's vastly undervalued to gold in terms of spread relationships, and we plot these in our reports and update them. We also know that gold and silver miners are vastly underpriced in relation to the ounce of gold and in relation to the S&P 500, for example. So as a category, both silver to gold looks cheap and ripe to go up many more multiples than gold will. By the way, this happened in the late 70s, 79 to 80, in the tail end of that bull market. Gold went up dramatically. Silver went up like fivefold compared to gold, okay? And it did it in the final year of that bull market. So it's not unusual. Similarly, it happened in 2010, in the final year or so, that 2010-11 peak, where gold peaked at 11, late in October 2011. Silver peaked in March of 2011, but silver went more berserk in the final several quarters of that move than did gold. It was like a white knuckle flight. I think we're going to have the same thing now with silver compared to gold. Gold is the mama, but silver is the wild dog on a leash. Okay, you know what I'm talking about. Okay, and that dog sometimes will run behind, as it did recently in the recent drop, and then there'll be times when it runs ahead. And I think we're about at that phase now where in the next leg up that we're about to commence in our assessment, because we've been in this, gold's been in a triangular congestion zone for now 3 or 4 months, okay? 2,800 high, 2,540 low, and twisting back and forth. Silver's had an erosional pullback from 35 into 29s. Now it's above 31 again. This next upsurge that we're about to see, and I'm talking now short to intermediate term, this next upsurge is likely to ignite that phase of the bull market where silver then dramatically outpaces gold. And probably also, if you wobble the stock market, you crack that bubble just enough to cause some fear and nervousness. Not a lot. You don't have to crash it or anything. You'll get some monetary, you'll get asset movement out of that category. And our bet is one of the places it's going to go is in the tiny little gold and silver mining sector, to where it will tend to go on a percent basis berserk. So that's where I think we are right now, literally, as we're talking. The problem is we want that NASDAQ 100 to trip our numbers. And so far, it's avoided them. It's danced above and below the number that we've specified. Right now, it's back above it again. It was below it a couple days ago. We see a weekly close below that number, then we'll say, okay, now it's likely to start. Why NASDAQ 100? Because it's gone up more than double what the S&P has, and because that's where all the leadership is housed. You know, the 7 great stocks. You know, they constitute like 50% of the NASDAQ quote 100. 5 or 6 symbols do. So that's where we're focused. You break the mama market, and that's when the fear will start to come in, because you'll start to get price decline. It'll alarm people. Money will then begin to flow out of that into other categories, and central banks will begin to panic. Well, as far as the world is heading, anytime there have been compounded errors over decades, now let's talking 4 years of Biden, I'm talking about decades of this sort of government further and further control over every aspect of your life and the economy, particularly the money control. When those errors get exposed and people throw their hands up in the air, you get dramatic changes. And I think it's about to happen. And I think the place to be, frankly, is primarily gold and gold related. Also commodities to some extent. I think they will be pursued. And I think it will lead to positive change, because when sometimes, you know, have a baby is painful, okay? Sometimes getting something good requires tearing something down that has not been good. And I'm not involved in politics anymore. I've written my thesis, and it's a book and so forth. But so I sit back and I watch events, and I focus on MSA's work. But I can see this unfolding, and I think we're literally in part 3 of Atlas Shrugged right now, where the S starts to happen, and it happens rapidly. And getting rid of things that are bad institutions and ideas is not a bad idea. You know, it'll happen naturally. Not by some unified force winning an election or something. It'll be ground up, and it reveal itself in many different ways. And I think we're headed to that sort of crisis now. But crises can lead to good outcomes. And at a price of 1140, we said, that's it. Bear is over, bull trend commences. And it's been a layered process. Obviously, you know, you've had $100 drop, hundreds of dollar drops on the way up, and yet it still persists. The short term sometimes comes into play if you're concerned, for instance, with something that's very time sensitive. Let's say you've got call options, and they're going to expire in 2 months, okay? And you've made some money on them, but, you know, you got to be careful here. And the big stuff says, no, this is still going to go on for, a good while. We're not threatening the bull trend, but you could have a wobble, the kind of wobble that could kick you in the gut in terms of your call options, or perhaps a levered future position, et cetera. So sometimes short-term or intermediate term is somewhat important, and we do cover that when we think it might be important. But we don't want to confuse our subscribers, many of whom are institutional, by the way, about confusing a short-term or intermediate-term negative with the full context that may be bullish. Because if you're a genuine investor, and there are very few of them around anymore, I think there was a study recently my son told me about that said that a major brokerage firm said that the average holding period for an investor is a month. What a world. But anyway, we need to differentiate between what's
Short and intermediate and the long term. Don't confuse the two. Otherwise, you'll miss the big moves. What do you think about Michael Oliver's bullish prediction on gold and silver? Do you agree with his view that the metals are poised for a major breakout? Are we approaching a turning point in the markets, or will it take longer for these price moves to materialize? Let us know your thoughts and price predictions for gold and silver in the comments below. If you enjoyed this episode, please give it a like, subscribe to the channel,